Hey, David, how's it going?
Hey, good, thanks. How you doing, man?
Good. Gearing up for the fall and enjoying a slightly calm market. I'm like nervous to say that. I got to look around and make sure, check my surroundings, but it's a little calm, which is weird. Still having trouble finding my next project property, but it's looking a little easier, which is good. What about you?
Yeah, this seems like the market is slowing. Not that we're like in a really slow market by any means,
Right.
but just not like the hysteria of summer, right? So,
Hmm.
still seeing houses sell pretty quickly, those kind of things. But we're seeing fewer offers come in, particularly in the houses that we're selling. Fewer offers come in, and uh, you know, we're trying to leverage that on the buying side by being maybe a little less aggressive with offers and like we found a property the other day in the MLS. It was priced very well. We went in at asking price. We didn't have to go in like 20-30% over ask and all these crazy things that have been going on, and like we got it. Like it was just kind of refreshing in a way that we were able to find a rehab house at a reasonable price and make a reasonable offer, and it just all kind of worked. So that's kind of nice to see after what the summer did.
No doubt. And apologies to those in still crazy markets. I know it's not like that everywhere. David and I are lucky to live in the Midwest. So
Yeah.
hopefully the hysteria is fading a little bit for us and continues to do so for all of you out there.
Yeah. And there's good and bad to that and all the differences that we see in different markets and all of that. But I think if nothing else, it feels like one more reason to make sure you have a really good realtor that has a really good pulse on the market. It's one thing for that person that, has a license and sells one house a year or something like that. And it's another thing to have an agent that really knows what's going on and can help you with that nuance of you just can't apply June strategy to September action right now. And those rules just change too quickly in today's market.
Yeah, absolutely. And a good reminder, I guess, David, while we're here, if you are looking for a good investor friendly agent, we can help with that. We have the concierge service, which will help connect you with a investor friendly agent for free. You can go to yfprealestate.com. There's a link right there in the main page that says connect with an investor friendly agent. You'll get to meet with me where we can talk quickly about investing strategy, what you're looking to do, where you're looking to buy, ask questions about things like budget, your must haves for the house, what your goals are. And then I can get you connected with an investor friendly agent. So if that's the piece that's limiting you, or if you're already looking today and feel like you need that next step or that next piece of the pie, I can help with that. So again, yfprealestate.com, and you can connect with me with the link that says find an investor friendly agent.
Perfect. Yeah. And speaking of other resources that can help your investing, we routinely say that a realtor is like the backbone, the core of your team, right? Because they're often introducing you to other people that can help, whether that's lenders or contractors, home inspectors. Realtors tend to know a lot of other people that work really well in that space, particularly if you find an investor friendly agent that's used to working with investors. It can also be helpful, though, to leverage other resources to make sure you're not just perpetually bugging your realtor with like, what's the rent rate on this house? What do you think this house would go for once it's sold? But to have a little bit of homework in advance. So every few episodes, we do these deep dives into a topic that's come up on the YFP Real Estate Investing Facebook group, or it's mentioned in a prior podcast, but we didn't really have time to unpack that thoroughly. And so we thought today can be a great opportunity to unpack some of those tangible tools that can assist with your property analysis so that you can more confidently move forward with your investing and work with that realtor very effectively.
Yeah, no surprise that us pharmacists like data and
Yes.
resources to justify a decision. I think everyone can relate to that, especially because we tend to be more risk averse, right? We don't want something to go wrong. Luckily, it's not as complicated as some of the things we have to do in pharmacy school. I mean, aminoglycoside pharmacokinetics comes to mind, something I totally failed at back in the day. But if you don't know where to look, it can feel like you're stuck, right? And there aren't resources easily available. So we're hoping to help with that.
Yeah, as we look at the parts of the deal analysis that get tricky for folks, again, maybe not as tricky as pharmacokinetics, but as we look at some of those parts that get tricky, what the property is worth, both in its current condition and once repairs are complete. What is a property going to rent for would be the second thing. And then a third thing is what should I expect to pay for property taxes? As we talk with investors, those are the three things that we see people struggle with, where some of these online tools can be really helpful. So let's go through each question on that list.
Yeah, and these are some of the most important things, right? If you don't know what a property is worth, you can't or what it's going to rent for, you can't do the rest of the math. So these are all the big ones. And admittedly, I am someone who's, as an agent, has access to the MLS, so I can look at a lot of this data, right? So if you have that background, if you are an agent, the MLS is a great place to grab a lot of this information. But even with that advantage, there are still other resources out there that I use every single day that can help a ton. So you don't need to have that, right? You can tap into a good agent to tap that information, but there are other things out there too that can help with that. So David, again, you're not a licensed agent. You do fantastically well still. So what are some of those things that you use? Like if you're looking for value of a property, for example, right? What are some of the things that you use to check an estimate?
Yeah, I think that's a really good question because I would imagine that most listeners are not also licensed agents. So
Right.
struggling with like, where do I go? And so I think the first thing that we talked about before we started recording, we wanted to emphasize is the asking price doesn't necessarily have anything to do with the present value. There's all kinds of strategy that listing agents are working in this market to either overprice it and just hope for a high offer or underprice it to drive a ton of traffic and get offers way over list. So the asking price doesn't necessarily always align with present value. And it may be very appropriate to offer well over asking price or well under or exactly asking price, like my story from earlier. The offers that we make are all based on comparable sales and not necessarily what the seller is asking.
Yeah, I get this question all the time. Nate, when am I paying too much? Is 10% over asking too much? 20% over asking too much? And my response is always asking price means nothing, right? It's just the number, like you said, where they're setting it to do something, drive action, or try to falsely raise a price on something, whatever they can do, right, to make that happen. So like you said, when you're looking at the value of a property, especially in the 1 to 4 unit range, right? If we're not talking about commercial space, but in the residential space, you're valuing that based on comparable properties. And really, the best way to do that is to look at properties that have recently sold, similar houses in a similar area. And again, it has to be recent and nearby for it to count. Usually, by that, I mean within 6 months and within 0.25 miles is ideal, right? But those properties that have recently sold and are nearby, and that are somewhat comparable, right? So it should have the same number of bedrooms. It should have roughly the same number of bathrooms. It should have roughly the same square footage, roughly the same finish, all those things. And you're looking at, again, what has sold nearby. And then you can compare that to what is trying to be sold. And that, again, is what we refer to as a comp or a comparable property.
Yeah. So my goal is to look at publicly available information that pulls from the MLS, just like you have access to the MLS. There's other websites that bring that same information. So in my market, I find that realtor.com, Zillow.com, Redfin.com pull information pretty effectively for what I'm looking to do. And again, different websites will hit different areas. So check that out. Check out what might work in your market. But those tend to pull relatively accurate market data from the MLS when it comes to sold properties. Again, from a comparable sale, I'm looking at what has sold and sold recently, not necessarily what is on the market and been sitting there for half of forever, indicating that it's probably overpriced. So even pending sales, like you were talking about, something that's pending is only going to show the list price and not necessarily what it's been negotiated to.
Mm-hmm.
So it may end up selling 20% higher, 20% lower. It could be all over the place. So I try to not put a lot of weight on active or pending, but I try to look at those sold properties. Redfin, as an example, has a lot of filters on there, so I can look at the kind of things you were mentioning. I can look at a certain area. I can look at a certain, within the last 6 months or within the last year. I can filter down to square foot and bedrooms. Those kind of filters can also be helpful because, yeah, if you're looking back at what sold in 2019 and trying to compare that to 2022 market, like you're in trouble.
Yeah, and it can be a little tricky, right? We're making this sound pretty easy, but it can be tricky because not every house is the same, right? We're looking at different properties over different areas that, again, are built in different times or built in different styles. And so it can be difficult, right? So the MLS helps you narrow that down a little bit more because you can look at things like property type, or again, you can really get that square foot dialed in. But again, even with that, there's not some magic way to do it. You just have to be able to look at the properties and compare them side by side. So what I generally do is I start with that bigger pool of, hey, here are the 6 houses that have sold within a quarter mile of this property. Now I'm going to look at all 6 of those and see, are any of these really outside what I'm trying to look for? If they're really wonky or really new or really old, really out of the condition of the property that I'm looking for, I'll just kick those out of the analysis and then do things from there. So again, even with MLS data, it's not that different. But still, the data is out there. You can grab it.
Yeah, and I find a lot of value in looking through those details as you get to that. So, things like when you pull up that list of properties, then and you're looking through those photos, you can see like, oh, this house has a full finished basement, and this house has a 3-car garage, and like whatever might make it stand out. So as you start to understand that range, like maybe these houses all sell between 150 and 180. And so if my house that I'm looking to buy doesn't have a garage and doesn't have a finished basement, I'm probably on the very low end of that scale versus the high end, comparing to their features and finishes and those kind of things. Is that kind of how you study those pictures as well?
Yeah, absolutely. Like you want to look at what it is today and then what it might be if you're going to be doing some rehab, because that's where you're trying to plan for, especially if you're comparing to properties that have sold down the road. And again, it's you're almost conducting like a qualitative assessment, right? You have to do it a little bit subjectively. There's an art to it
Yeah.
rather than just a science. And again, it can be tricky, right? The goal is to find what you can to make it comparable, and think about how someone else would assess that, right? Think about how someone else would do the same analysis, and would they buy that house for that same price? You mentioned not looking at pending sales, but or sales that are active, that haven't gone through. But one thing I do like about that is if I'm looking at a property and I think it's valued at $300,000, my last double check is to go backward
Yes.
and look at what else is available for $300,000. And if every single property out there is better than the one that I'm looking at, I might be wrong about my value, right? So that's another way to kind of double check your math at the very end.
Yeah, absolutely. Those double checks, again, we're risk averse pharmacists, right? So we love the double checks. That's a great double check. Another double check that I like to use is I'll go through and I'll do that math myself. And like we said, like I'm not a real estate agent. So I can do the math, but then I like to bounce that off of my real estate agent also and say, like, you know what? I think that a good offer would be here based on this. I think that once I fix it up and we do this, it'll probably be worth this. Does that sound about right to you? And let then the real estate agent comment from their analysis.
And as a realtor, I love that. I wish all of my clients did that. It sounds duplicative, but it's not, right? It helps me a ton because if you're starting off in left field, I can help guide you back. Or if you've done a lot of that legwork up front, it double checks me as well, right? Like we're not perfect at this either, and it's nice to be able to go back and say, oh yeah, I am getting what you got, and here again, I agree. These two things match up. So 2 hours really are better than one in this. And again, it makes my job a lot easier to have somebody who's already in that mindset, doing it the way that I would do it, so that at least our numbers are going to be close.
Well, yeah, and my like inner safety oriented risk averse drugstore pharmacist is like we double check everything in a pharmacy, right? So like this similar safety feeling feels like it rings true here when we have two different people looking at the math and in agreement that's probably about right.
I love it. And if we're talking about rental properties, one of the most important next steps for me is not even the value is great, right? You want to make sure you're not overpaying for something, but really that rent rate is what makes the math go forward, right? You can't do any of your math without that rent rate. And I don't know about you, but since I started doing analysis, I realized very quickly that that rent rate can matter a ton, right? You can only get so much out of a property. And if it's not the right number, then you can really be running your math all wrong. So let's talk a little bit more about rent rate and why it's important to get that right.
Yeah, I think there's a lot of folks that are after a property that brings in some cash flow or is at least pretty neutral in the cash flow standpoint. Not a lot of people, particularly in their first rental property, are looking to buy something where the rent is less than all their expenses and they have to feed, right? Like, so people are looking for that. And in a lot of situations right now with high prices and high interest rates, there may not be a lot of margin there. So if you're counting on a rental property renting for $1,500 a month, but it ends up only renting for $1,000 a month, that can be potentially catastrophic where you
Right.
have to feed that a lot every month to make that work. And so just similar to identifying that property's purchase value, I try to estimate rents in a similar way. So tell me as well what you do, but without access to the MLS and things like that, I jump on Zillow. I know that Zillow, like there's a lot of realtors that are not super in love with Zillow and all the estimates, but I find that the rent estimate is one factor that I can put in there. And then rentometer.com
Mhm.
is another one where you can go in and you can get kind of ballpark prices. And I feel like that gets me just in the general realm of what it might be. But just like we talk about with looking at pictures, that doesn't factor in every detail about the property. A super dated house versus a super nice house, or a house with some of the factors that may not always get considered, like garages and finished basements and things like that. So I know cosmetics aren't the only factor, but what are the things are you looking for when you look at a rent rate?
Yeah, there are a lot of those other factors, right? So how well do the neighbors keep up the house, or where do you next to, right? Do you have here? I'll throw a realtor term at you. Is there functional obsolescence with the property, meaning that there's something wonky about it, or there's something nearby that really messes up that value and ruins the rent rate? So there are some of those kind of wild card factors. But you're right; it really boils down to being able to look at those factors, analyzing them holistically across the board, and then applying them to the same property and saying, if I were a tenant and I was renting one of these houses, would I pick mine for this rate? And if not, why? And starting to assess that. And this is one area where I think the MLS does give me quite a bit of an advantage. It tracks old rent rates, whereas I found that a lot of times Zillow, Redfin, some of those, they won't track all of the sold properties, quote unquote, on the rental side. They don't track that as easily. So the MLS really helps with that. And again, it's a great time to tap into your realtor if you don't have access to that.
Yeah, and again, not just tapping into for the data, but tapping into for the second opinion, because I think it's
Yep.
easy to find a property and get really emotional, like, oh, I want that one. I can, I'm sure that someone will pay just as much for that, right? Or those kind of things. Like you can start to justify those things, and there are a lot of those factors that may not come front of mind. Like there's one market where we buy in. Some one-way streets with no street parking and very limited off-street parking. And so if a rental house has one off-street parking spot, and otherwise you may have to park like blocks away, that can really make it difficult to rent that property compared to another property a few blocks away that has a big garage, driveway, all those things. So there's a lot of factors where market nuance can play in, and again, having that really good double check can be helpful.
Yeah. And you mentioned something too that I think is important, David. You talk about removing the emotion from that. It's easy to like fall in love with a house and not look at those factors. And again, you really got to be objective about this, right? This is not the house that you're going to be living in. This is a rental. It's a business. And so being able to step back and say, you know, is this actually something that someone is going to want to rent at this rate based on what I'm seeing around nearby? And it's super important to be able to step back and do that.
Yeah, I think that one of the things that can also help that is getting on a website of a local property manager.
Mm-hmm.
Because local property managers, again, if you don't have MLS access like me, then sometimes a local property manager may have a lot of listings. They may even have some listings that are tied up because they want to still advertise that they have a lot of listings and a lot of availability out there. They may be taking applications as backup, things like that. So you can start to get a lot of pictures, a lot of details that way, and then kind of see trends from there. If it's a property manager you work with, or you're contracting with them to do your property management, that can even be another resource to reach out to as well. I had one recently where the property manager that we work with had a property just 3 doors down from the one we were looking to buy. So I said, how is that one looking? What have you been able to see as far as how quickly you've gotten applications in? What are people saying when they walk through it? Do you think you're going to be able to get that rent rate? Those kind of things. And so then they're able to estimate, based on what we're seeing with this and others, I might think, maybe between 1,100 and 1,200 a month for the property you're looking at. Or, they may give those kind of ranges because it's still a little squishy with season and all those kind of things that play in. But sometimes you can get pretty good estimates as well from property managers.
I usually give the range as well because especially if my client is someone that's going to be fixing up the property, I don't know exactly how they're going to fix it up. I also don't know exactly when they're going to list it, right? Are they listing it in the height of summer, right before school starts and everybody's trying to move? Or are they going to do it, after the school year started when people aren't as interested in that? There are just too many factors to give it an exact number, which I know is like nails on a chalkboard for pharmacists and CPAs out there. But for us, like it really is the reality, right? We have to kind of give a range on what someone's willing to pay. And then a lot of it comes down to how you market it, right? Are you taking good photos? Are you listing it at an appropriate time? Are there other houses nearby that are available that are quote unquote better or competing with yours? And so again, a lot of it comes down to that final actual listing to finalize what's in that range.
Yeah, there can even be some strategy I'm learning as I talk with property managers about if you really want to get someone in there quickly, you may price it low. Or if you
Right.
really want to make sure that you're maximizing the dollars, maybe you throw in things like, we will consider pets for this property if you weren't otherwise considering pets. And sometimes you can get additional rent that way. So there are nuanced factors in there also that the property manager can help to pick out. This one across the street or 3 doors down rented really high because it had a really nice fenced in yard and they were good with dogs. And those properties are really hard to find. Those kind of details can be really helpful in that analysis. So I think that wraps up purchase price and rent rate. But property taxes are another one that feels like it should be relatively straightforward, but it also feels like something that gets messed up quite often. So Nate, why don't you start us off with property taxes?
Yeah, and this came up on a recent podcast we had with Drew back on episode 71, where you look at the taxes that are being listed on Zillow or Redfin or wherever, or even the MLS, and the taxes that you would be paying, the property taxes, may not be the same, right? They might be reduced because they are an owner occupant and you're going to be an investor. Might be a homestead reduction because they're a senior citizen and you're not. And again, you're not going to be living there. Taxes might be reduced or increased because of some other factor, like an assessment being done. I've seen where the street puts in new sidewalks or new streetlights, and they tack on a small assessment fee to everybody on that block for the course of 1 or 2 years. And that might be in place today or might about to be going into place down the road. So the taxes feel like they should be straightforward and it should just be one number, but they're not. And it's easy to kind of get that wrong. And it's important because it's a huge part of the analysis.
Yeah, and again, it can factors like that can really make or break an analysis. So there was a 4-unit property that I evaluated recently, and I was really excited about it as I went through it because it penciled out to having about $600 a month in cash flow. And in this market, I know that that's not easy to find, particularly in my market and price point. I was pretty excited by that. As I'm doing the math, I was looking at what was the current owner paying in property taxes, and he was right about $300 a month. When I was talking with him, he was sharing all that very transparently with me. But then I went to do the double check, and I jumped on the county's property tax or the county assessor website, and they have a property tax estimator, like a property tax calculator with a lot of the details. And it describes that at the point of a sale, it gets reassessed and it will uncap to a current value. It was estimating a $900 tax bill instead of a $300 tax bill, which took my $600 cash flow down to completely zero. So it completely broke the deal because I try to buy properties that are cash flow positive. So I've got a little cushion there, right? So I mean, I'm sure that someone will still buy that. It's a wild market. People are buying everything. But for me, that was no longer a fit because the cash flow is gone once those taxes reset.
And imagine if you hadn't looked that up, right? If you had said, "Oh, taxes 300, thanks, bud. Like we're good. Let's keep moving." It would have been devastating when that new tax bill came in, right? It would have been the reason that you sold or the reason that you got rid of that property. And so that tool is super important. The county or municipality website, you have to check that. And if you don't feel like that's enough information, you can always call in, right? Talk with somebody at the office and say, "Look, considering buying this house, what is this going to look like for me? Are taxes going to go up? Do you have a calculator? Do you have a way to estimate this?" And a lot of times they will. Again, Drew shared a story where he did exactly that, or he called them up and they said, "Yeah, it's going to go up to this." And they knew right away because you need to find out if there's going to be some sort of exemption that expires or that uncapping that you mentioned that's going to take place. Or again, just assessments that are coming down the road that you may not be aware of that can really affect your numbers. So definitely recommend that, the county or municipality website, and calling if you absolutely need to.
Yeah, another nice thing about calling in is there may be other fees that the county may charge for rental properties that that you may not have considered. Like in a lot of municipalities, there's some sort of permit that you need to rent a property. And so there may be a charge for the permit, a charge for inspections, other things like that. And so as you understand and just kind of ask around, those can be other things that you have to build in. So if that's like a $500 fee every 2 years, then you just build that into the math. That's an expense of doing business to make sure that you've got all of your ducks in a row. So that phone call, I know not a lot of people love jumping on the phone to ask these kind of questions. If you could find a website real fast, and we're focusing on websites, but that's a phone call that can be really helpful, is just to call into the city and ask some of those questions about, where are the property taxes going to go? Are there other requirements to owning a rental? Anything else that I should make sure that I'm factoring in so that I'm not surprised once I buy a rental property in this market? So really between then Redfin, Realtor, Zillow, Rentometer, we didn't even really talk about Craigslist or Facebook Marketplace, but those are two others that we kind of had on our list of if you're looking for rental listings, depending on your market. I know Craigslist is popular in some, less popular in others. Facebook Marketplace seems super popular in my market for finding rentals. So you can get a lot of pictures, a lot of info. The comments can be thoroughly entertaining. And so looking there, property manager websites, county tax auditor website, hopefully that's a lot of browser tabs that you can open up as you're doing your deal analysis. So anything that I'm missing there on the due diligence side, Nate?
No, I think that we hit some of the bigger ones. I'm sure there are some more niche opportunities out there, things that work with like the short-term rental space, or that would work with different types of properties in different areas. But for a general, here's a good place to start, I recommend those. And then, like we mentioned at the very top of this episode, talk with your agent, right? Especially if they're an investor-friendly agent, they're going to know the resources to tap into that make sense for their market. So make sure you do that and do this due diligence the right way, because it's the core of what we do, right? We're not investing with emotion. We're not investing with guess and check. We are really trying to analyze these properties up front, make sure that they work, and then making sound decisions based on that. So hopefully that gives you guys some background. Hopefully the resources we provided are helpful as you do your analysis. And one more thing I want to drop for you, if you are looking to do this analysis and looking for a way to do it cleanly and on a spreadsheet like David and I do, we have built one for you. You can tap into that on our website. If you go to yfprealestate.com, you can find a link that says download the property analysis spreadsheet. And right there, you'll be able to tap into that, put in the numbers the same way that David and I do when we're running analysis, so that you can feel just a little bit better about running those numbers and making sure a decision makes sense before ever pulling the trigger. So hopefully that helps you guys out. And if you've got questions about other pieces about the analysis, please send them our way or connect with us on the YFP Real Estate Investing Facebook group. We'd love to hear from you guys. We can do more deep dives about it in the future.
Thanks for listening to the YFP Real Estate Investing Podcast. If you like what you heard on today's show, please leave us a review and subscribe to the show so you never miss an episode. If you have a question, know someone that would make a good guest, or want to connect with Nate or David, head on over to yfprealestate.com and join the growing YFP Real Estate Investing Facebook group. As we conclude this week's episode of the YFP Real Estate Investing Podcast, an important reminder that the content in this podcast is provided to you for your informational purposes only and is not intended to provide and should not be relied on for investment or any other advice. Information in the podcast and corresponding materials should not be construed as a solicitation or offer to buy or sell any investment or related financial products. We urge listeners to consult with a financial advisor with respect to any investment. Furthermore, the information contained in our archived newsletters, blog posts, and podcasts is not updated and may not be accurate at the time you listen to it on this podcast. Opinions and analyses expressed herein are solely those of your financial pharmacist, unless otherwise noted, and constitute judgments as of the dates published. Such information may contain forward-looking statements which are not intended to be guarantees of future events. Actual results could differ materially from those anticipated in the forward-looking statements. For more information, please visit yourfinancialpharmacist.com/disclaimer. Thank you for your support of the YFP Real Estate Investing Podcast. Have a great rest of your week.